But let's us also move forward. We have Kunal and Ashish Kapur now with us. Let's start with Ashish this morning. Good morning. Welcome to the show. You know, there's so much happening in our market. So if you could tell us from a fundamental and earnings standpoint, since Q1's right around the corner, how do you see the market behaving? And is there any particular area which is looking exciting to you?
Well, the result expectations are very, very low, and I think there is no brainer to say that the results in at least of the first quarter are going to be a complete miss. And I don't think anybody in the market is expecting anything other than that. So to that extent, markets do look little stretched for the near term. And what we are already witnessing is some cooling off or some kind of a consolidation which is going on. However, keeping in mind that the liquidity, not only here, the worldwide is ample, and also given the fact that markets do look ahead, they don't look at what is already given and what is already certain. I would think that this consolidation phase is a good time to consolidate, to look at your portfolio and try and accumulate quality stocks. The broader market looks actually very interesting. Even if the indices do not go up much further from here, I think the entire basket of mid and small cap space is coming back after a long duration. So even now, the discount of the small and mid caps to the Nifty large cap or the Sensex large cap is still at a near record level. So if one is good at stock picking, this is still a very good time to go hunting for stocks. Other than that, I think the investors should stick to SIPs and should look for adding quality names on every decline. I think the market perhaps for the next couple of weeks could slip a little further and could have a time-wise correction also. But I think overall the sentiment is still a buy on dip, and I think the markets could, after a consolidation, start moving higher. So I would advise investors to use this consolidation phase to try and buy into this. And yes, do your research well, because everything may not move up, and you have to really make sure that the companies which you are buying into have good fundamentals, and very important to go for companies which have cash reserves and little or no leverage on their balance sheet, and have good presence in their business segment, which will give us the confidence that they will survive this upheaval which has been caused by the COVID crisis. So be very careful in your stock selection, but yes, do use this decline to buy into quality for sure.
Thank you so much for that, Ashish. While we're still waiting for Kunal to connect, let's bring on board our first query. We have Chaitanya Vuyuru, who would like to know what he should do with Shriram Transport Finance. And he's not really mentioned any prices, but that's the company he'd like outlook on. So what's your take on that one?
Well, I quite think that the NBFC space is not going to do well in the near future. I really don't have what price he's gotten, but in case he's not really losing much money, I would suggest that he should book out from here and put his money somewhere else. Although Shriram Transport Finance would be one of the better managed NBFCs, but given the fact that this entire sector is going to see a lot of pain, the entire sector, along with banks, are going to face the brunt of a lot of small companies which are going to find it very difficult to service their loans. So for the next few quarters, I think NBFCs, particularly Shriram Transport Finance, and should be avoided. So I think use any kind of an uptick to get out of this stock and put your money somewhere else.
Okay. Thanks, Ashish, for that. Let's move on to our next email query then. Vinayak Jain from Pune writes to us. He's bought 100 shares of HDFC Bank at 800 rupees. He's a long-term investor, so wants to know how the prospects are looking like. 800, good price to dip into an HDFC Bank given the kind of lows recently the stock made. It has recovered significantly from it, but what would be your call? Should he hold on to it? Should he add some more? Or what should one do with it?
Well, I clearly think that HDFC Bank is one of the best managed banks, and there's no difference happening despite the fact that Aditya Puri is going to retire end of this year. So I think the uncertainty by which this stock has come down is clearly presenting a buying opportunity. So I would say both, that the investor should stay invested, and yes, if he wants to buy more, these are good times to add to HDFC Bank. Though, like I mentioned, that the entire banking space is going to see some pressure on their NPAs and margins going forward. But clearly, HDFC Bank is the best quality which one can come across. So the bank also has a huge presence across different segments, has subsidiaries in various other businesses. And what is very impressive is that the bank has made very good inroads into rural and semi-urban India. So today, I think wherever you go, whichever part of India you go, I think the HDFC Bank brand shines very bright and is slowly getting into the trust of even regular common people in the countryside. So I think the bank has a great future going ahead. The current downside caused by uncertainty over bank earnings as well as the future CEO is presenting, according to me, a very good opportunity. So I think clearly this is one stock which you should look at adding on at the low, on every decline.